Let's get to Bob Pisani as well. Morning, Bob.
Good morning, Carl. Hopefully we'll close at a new high today. We've been waiting for days to see if that'll happen. It's a little bit of disappointment because those bond yields Rick was referencing should be helping stocks. Not so much. Just take a look at the sectors, though. Tech generally leading early on. A lot of debate about whether growth is going to come back in the second half of the year. Energy and REITs have really been the big winners this month. Flattish, as you can see today. Banks down because of yields keep dropping. Rick was right on top of all of that, of course. Why are the bond yields lower? Look, I mean, you saw what Rick was talking about here, the slow descent that we've been seeing. It started even before what was going on with the jobs report. But there's a number of good points that the traders down here keep making the last couple days. Maybe some less lavish spending from Washington is partly responsible. A lot of people talking about the potential for slower growth in the second half of the year. Some believe, maybe the Fed's right. Inflationary pressures are transitory. A lot of different debate about the causes. But one thing's for sure, costs are going up. Do you see what the Campbell CEO said this morning? Our results impacted rising inflationary environment, short-term increases in supply chain costs. This is the CEO. And some executional pressures as we continue to advance our agenda, primarily in our snacks division. But a lot of people, a lot of companies talking about higher costs here, not just Campbell's. And by the way, their earnings revenue were below forecast. Brown-Forman talked about higher input costs. Sherwin-Williams' higher costs. They're raising prices as well. Chipotle hiked menu prices by 4% recently. The Times had a big story the other day on Uber and Airbnb raising prices. Forget about low-cost taxi rides. That's not going to happen anymore. So it's definitely costs are going up. We're all going out a lot more. CPI is tomorrow. That's what a lot of people down here are going to be focused on for a good read on inflation. Keep an eye on that one. Meantime, growth versus value. Everybody's trying to figure out the second half of the year. I know Marco Kolanovic and Kathy Wood were out talking about growth is going to outperform. Okay, here's the story. Value has been up twice as much as growth so far this year. It inverted beginning about February. The index guys point out the obvious. Stop debating this. If you would have just owned the S&P 500, you'd split the difference. You'd be right in the middle. Value and growth are very confusing categories. Value is things like oil stocks. It's things like retailers like Gap, commodities like Freeport, and some of the banks like Wells Fargo. But there's other stocks like L Brands that are right in both of the categories. So it's a little bit difficult. Growth is not just technology stocks. Caterpillar is a growth company, for example. Deere's been a growth company for the last several years. These are not easy categories to figure out. I would simply say split the difference. The index guys certainly have a point just owning the S&P 500. Finally, Power Lunch today. Want to talk about meme stocks? Let's talk about it with the guy who's in charge, Gary Gensler, the head of the SEC. We'll talk to him about Robinhood. We'll talk to him about what's going on with all the meme names that Jim and everybody else has been talking about. We'll talk about payment for order flow. We'll talk, of course, about what's going on with climate change and the SEC's efforts on top of that. And, of course, what's going on with Bitcoin as well. Be a very interesting time there. Carl, back to you.
All right, Bob, thanks.
Shepard Smith here. Thanks for watching CNBC on YouTube.